In this video, I will give a quick update on the S&P 500, the US dollar, the USDCHF, USDCAD, EUROGBP, and the yen pairs. This is the S&P 500 E-mini futures daily chart, and what we're looking at here are cycles. The pink cycle at the bottom is about 7.5 months long. The blue cycles are a little over 2 months long. The yellow cycles are 1 month long. I don't use these all that often, but we are going to discuss them today. And then these orange cycles are about 2 weeks long. In last week's video, I discussed how I was expecting price to continue up before making a bit of a correction. And that analysis has changed a little bit, and I'm going to explain why using these time cycles. So when we have a longer term time cycle, we can use the shorter term time cycles to help confirm when that trough is in or when the peak is in. And we can do that if we look at the beginning of this cycle here. We can see the 2 week cycles started putting in lower lows, so they were negative cycles. And then in this 2 week cycle, we put in a higher low, which suggests that the longer term trough is in. Well, the same thing actually just occurred here, where we have a 2 week cycle low. We actually broke below that trough over here. And that would suggest that the peak for this 2 month cycle is actually in. Now, this is very early, and so it actually opens up two possibilities. One is that, well, it's going to be a negative cycle and it's going to continue to sell off. Negative as in the 2 month cycle. The remainder of the 2 month cycle will be negative. The other likely possibility is that this is actually an early 2 month cycle trough. And so if we were to measure this, we'll see this is 42 days. That is very early. That's about the earliest you would expect for one of these cycles to be. However, if we look back at some of the other recent cycles, even going back to last year as well, we can see over here we had a very short cycle, 52 days. The following cycle was 53 days. The next cycle was 53 days. Then we had a normal cycle and another normal cycle going into and out of this longer term trough. But then since then, there has also been a bit of discrepancy in the lengths of these cycles, 47 days. And then this one was a little more normal, 58 days. So 42 would be the not only the shortest pretty much that we would expect in general from one of these cycles, but even amongst these shorter cycles we've been seeing lately, it is the shortest. So it is possible this is actually a 2 month cycle trough. We'll be able to use the next 2 week cycle to help us determine if that is the case. If that's not the case, what could be playing out is this is actually a mid-cycle trough. And I realize this is not coming exactly at the middle of the trough, but the idea is that while this is correcting something, it's just correcting a different shorter time frame cycle, in this case the 1 month. Now, I've mentioned in a number of other videos, I don't really use the 1 month cycle all that often. It's pretty inconsistent and it's not all that helpful in trading, but this is an example where if we are extending, this could simply be a correction of the 1 month cycles, and this cycle could still extend, this cycle being the 2 month cycle, and we could be looking ahead at a trough later in June or potentially even early July. If we look at the 2 week cycles, this most recent cycle, assuming this is the trough, was 17 days. If these cycles are starting to extend, and this cycle is going to extend, and we could potentially have 2 more of these, that would be 34 days based on the recent cycle, assuming that is an average going forward. That would bring us out to early July. So we have to start looking for that possibility. We are on the SPX daily chart, and in last week's video, I discussed these different levels that I was expecting for the potential retrace, but that was assuming we stayed in the shorter term median line set I had on, which would have brought us up towards this upper warning line. That did not happen. We broke below that lower warning line and out of that median line set, so I have removed it. However, what is of note here is that the longer term median line, lower warning line, was tested and held with good strength. This is another reason why I am open to the possibility of a very early cycle trough, because we should see some continued bullishness after such a strong test and hold of this lower warning line, which would suggest we could still move up and then see an extended cycle where we get the retracement a bit later than originally expected. However, if that does not occur, if we do break below this and we don't ever get above this expected area, this 15% would pretty much all go right into this box. And then I think there would be a pretty good chance that we'll come back to this median line here. With all of that said, considering the potential for an extended cycle, in which case I do believe price would move higher, or an early cycle, in which case price should definitely move higher, and considering the support of this lower warning line, I am cautiously optimistic we're going to see more upside. And on Monday or Tuesday, I'm going to be looking to put on a shorter term, something with about a 1 week expiration, and then an intermediate term, something with about 3 weeks until expiration to the long side. I'll probably do spreads. I'll buy something that's in the money, and I'll be able to use this lower warning line as dynamic support or as a dynamic stop. And should we roll over and then close below this lower warning line, that would suggest that perhaps this is going to be a larger correction. In either case, for the shorter term expiration, assuming I get a good entry, I would look to close that one out pretty quickly, probably somewhere around these highs, around 53.20, as there is a lot of resistance here. But in the event that this is that longer term trough, I do want to have a little bit of exposure to the upside, and that's why I would also include the slightly longer term spread. If you like the video so far, be sure to hit the like button and subscribe for more content. This is the US dollar daily chart, and at least for the time being, we are holding this trend line, and this is coming in around the expected longer term cycle trough. This is about 5.5 months. And it does appear, whether the low is in on May 28th or if it just came in on Friday, it does appear as if we have put in a higher 2-week cycle trough. As of right now, I would put it here as May 28th. And so while I prefer that location, it's almost irrelevant whether we put it here or here. Should we break below Friday's low, that means we're also going to be breaking this trend line. And if we close below that, that would be a huge red flag for the US dollar. And there actually are some other bearish signs that are occurring right now, which I will discuss a little later in the video. I'll touch really quickly on EURUSD and maybe even GBPUSD to show those. However, at least for now, considering the timing and the price grinding along this trend line and the lower warning line of this longer term modified shift, which I put on based on the pink cycle, prior pink cycle, the initial trough, the high, and then what I believe to be is the current initial trough of this pink cycle here, or the final trough of this cycle here. We bounced from it once, and then we just hit it again on Friday. Holding that and the potential of a 2-week cycle trough, which came in higher than the prior 2-week cycle trough, suggests this bottom is in, which would suggest further upside is expected in the US dollar. So until we see a breakdown, my bias is to the long side for the US dollar. This is the EURUSD daily chart, and just like the US dollar is currently grinding along dynamic support, the EURUSD is grinding along dynamic resistance. We have this very long-term median line set, which I've discussed a number of times in prior videos. We've tested it multiple times, and now we are nearing the end of a 2-month cycle trough. And the expectation would be, once this trough is in, we should see a good return in bullishness. If we manage to grind along this way, perhaps towards one of these lower warning lines here, and hold this area going into this 2-month cycle trough, I expect we might break out of this very long-term median line set. And should that happen, that will be a disaster for the dollar. That would suggest that a very long-term cycle in the dollar is rolling over. And there's a lot of time left on that cycle, which would suggest a lot of bearishness to come in the dollar. So I'll be watching the US dollar chart and the EURUSD charts very closely to see what happens in the near future. Basically, one of them is going to be breaking out and the other one is going to be failing, and it should be in a big way in both cases. This is the USDCAD daily chart, and this week we got almost the exact entry that I was looking for that I discussed in last week's video. So I had a standard median line set on here, and I discussed how I'd be looking for it to move towards the lower warning line and potentially spike this median line of the longer term modified shift, which gives this median line here. I wanted it to spike down and find support before bouncing out, which would have been potentially a higher 2-week cycle trough. Well, we got exactly that. It did not hold the standard median line set. I discussed how I'd be looking at it on the hourly chart, and so I've zoomed in here to the hourly chart, and that particular lower warning line was moving somewhere around here. We never got any type of bounce. We just sliced right through it. So as soon as that happens, the ideal thing to do is try a modified shift. And in this case, it makes a bit more sense as there is a very minimal pullback here after a very long move from a timing perspective. So typically when you get a sharp move in price or a small pullback after a move which takes a good amount of time, a modified shift is usually ideal. So once the standard median line failed, I put on the modified shift, and as you can see, we originally touched the median line, the long-term median line I was looking for. We broke below it, and we actually broke below the modified shift. We came back up, we grinded along it, and then we got the hourly candle that I was looking for. I was not home at the time, so I did not get to enter as soon as we broke back above. I got a slightly worse entry, but it was still pretty good. In last week's video, I discussed potentially getting something around a 30 pip stop. I got 31.5. And so when you get a very short stop like that, it gives you the opportunity for your first take profit to be pretty good. And so what you do is you use the prior 2-week cycle, the initial trough, the high, the low. I put a standard median line set. That is always the go-to, is the standard, or almost always the go-to. And so my first take profit was this median line, and I got about 2-to-1, which made this a free trade. Now I only took a third of it off at 2-to-1 and left the other 2/3 on, 1/3 with a target of 5-to-1, and the final third with a target of 11-to-1. However, while I have not been stopped out yet of the other 2/3, it does appear this is rolling over, and I have very little confidence in this as of right now. So I do believe I'm going to get stopped out, but this will ultimately be a free trade, a break-even trade, because of that first take profit. This is the USDCHF daily chart, and unfortunately for this, as I discussed in the prior video, while I originally was going to take half off at 1-to-1, because I believed the longer term trough was in, I decided to hold it looking for a much larger return on the risk. I do not regret that. While this did not work out, I closed this out. It may be holding the exterior quarter line of this modified shift here, but I did close this out for about a 0.68 stop loss. This also could have been a free trade had I taken the half off I was originally intending to do, but as I mentioned in the last video, when it comes to what I expect to be much longer term cycle troughs, I only want to take some profit if I can get a really decent risk to reward on that, usually more than 1-to-1. Because again, if this is the cycle trough, and so even if this does hold over here and I closed it too early, you can get something like here. I have 4.46, so about 4.5-to-1. You can definitely get those trades there, and so it's a little bit more worth the risk to leave the whole thing on versus some of the later cycle trades where you might only be looking for 1 to 2 stops somewhere. Then I would definitely be taking profit early, but I do like to try to leave as much of it on as possible, if not the whole thing, when I do think or I do feel confident that I'm catching a longer term bottom. So now, while both USDCAD and USDCHF are not really working out at this point, well, again, I'm not really out of USDCAD yet, but USDCHF I am. Considering the potential bottom in the dollar, it's still technically held. I will look for long positions still in both of those, should we maintain this trough that came in on May 16th. However, considering the EURUSD chart that I discussed and that we're just grinding along the dynamic supports we have in the US dollar, I may look to take profits a little earlier than I originally had tried in what I expected to be the longer term trough, as it does appear that the possibility for the dollar to roll over is increasing. Now, it could just be extending. So if we look here, the prior pink cycle, it did extend by about a month. We could be doing something like that. Perhaps we'll break down sharply and we'll achieve this corrective median line, and that will put in the bottom. That's very possible. Or it could actually extend, really, it could extend all the way to the end of this next 2-month cycle. I wouldn't expect that, but it is possible that perhaps this is not the only extension we get. Perhaps we get 2 of these that extend over, or just this month long and then another 2 weeks on top of that, something like that. So should we break down, that becomes very possible. And then I would expect actually that that just means we're extending. If we break this, my first scenario would be that this is just extending, because I don't think this is enough bullish pressure to suggest that the longer term cycle trough is in. If we look at some prior pink cycles, we do potentially peak pretty early with only a little bit of bullishness. But in general, we get some more extended moves. I mean, this is obviously a very bullish cycle. But if we look at the first phase of these pink cycles, we're getting a lot of bullishness. Even when it's less bullish, we at least get more time. This is less bullish, but it was at least more time, and this would have been a blue cycle in here. But even in this bearish cycle, we at least get, again, more time and actually more price action there as well to the upside, even in a bearish cycle. These types of cycles are much more rare, where you just get a quick little bounce and then a ton of bearishness. But again, we'll be watching this and the EURUSD closely to see if something like this does become a bit more possible. But that will be a more of an outside chance than just an extension on this cycle. This is the EURGBP daily chart, and nothing has changed from last week. I'll still be looking to manage this trade as discussed in the prior videos. Also, as I've discussed in the prior videos, it's common for us to, while I don't think this is a valid median line set, we didn't really get close enough to the median line. We just kind of grinded along it. I think the valid median line is the modified shift, because we have a sharp move down, also a sharp move up. Usually when you get those sharp moves, a modified shift is the way to go. But what does happen sometimes is you get the upper or lower warning line, if you're moving up, of a standard median line set, and price does exactly this, where it kind of grinds along that upper or lower warning line as it moves to its target. And in this case, here I'm going to take this off for right now, we hit the lower warning line of this modified shift. I don't think this is over yet. It could be, this could be the bottom of this longer term cycle, but that would be a little early. That's not unreasonable, but I do think we'll at least get this additional 2-week cycle. So what I'll be looking to do is, should this cycle roll over, I'll move the stop to above this high, and then I'll be looking to take profit here. I don't know if this lower warning line will break, so should we be near the lower warning line around the end of this 2-week cycle, I'll look to take profit here, and that should be about 2 to 1. It won't be the full 2.3 to 1, but somewhere around 2 to 1. Okay, so looking at the week ahead, we're starting to see all of the yen pairs set up for potential longs. Now, I don't think they have a ton of upside, but there are potentially some good one-to-one trades to look for in here. If we put the 5-day moving average on in here, it looks like the US dollar may have already put in this 2-week cycle trough. In fact, I'm going to put it on there right now, because we broke and closed below the 5-day, and now we have broken and closed above. If we look at the EURJPY chart, we see pretty much the exact same thing, as well as the GBPJPY chart. The cycles are a little off on this one, but we're seeing the exact same price action. And actually, while I do think the US dollar is going to be a little stronger than the pound and the euro over the next couple weeks, so I think I would prefer that trade, I like the setup on the GBPJPY the most, because we have this longer term modified shift. We just back tested the median line of that and bounced off. When that does happen, quite often what you're doing is you're actually, so this would be 173 pips, what you're actually going to ultimately do is move towards the upper warning line. So this might be one where, I mentioned a moment ago, I'd just look for 1-to-1. Maybe I take profit at 1-to-1, and then I put a trailing stop behind the prior day's low. So hypothetically, what that would look like on the prior cycle, had you taken this trade, once you reach 1-to-1, So maybe you go to the 4 hour and you can find something a little closer to your entry than the daily candle. Let's say 165 pips. You hit your 165 pips on this day here, and maybe you give it another day or so to play out, and then what you do is you move your stop up to behind this daily low, and then behind this daily low, and then behind this daily low, and behind this daily low, and you just keep trailing it until you finally get taken out. And then finally, I mentioned this before, but the USDCHF and the USDCAD, if they are putting in the lows of these 2-week cycle troughs, I actually still will look to, well, your USDCAD I'm already in, but USDCHF, I will potentially look to re-enter this should it appear as if we are putting in a cycle low here, because this will be a higher 2-week cycle trough than the prior 2-week cycle. The only difference is this time I would probably look to take profit a bit more quickly to try to make it a free trade and then leave a runner. As always, thank you for watching this video, and be sure to subscribe for more.